morning, everyone. Welcome to my channel A to Z in Lives. It's a part of the channel. It's a finance and trading channel. Please subscribe my channel to get more videos like this. Today, I'm going to present the London breakdown strategy, as you see in the title. So I go with the support and resistance line and the trend line, and with a stochastic oscillator to see overbought and oversold situations. It works. 80% it works. Not every strategy is perfect, but this works. If you can see the yellow box I drew on the top, the time is between 6 a.m. and 8 a.m. GMT. London session starts at 8 o'clock, but from 5 to 6 o'clock it's ranging at 8 o'clock. The support and resistance line normally crack opens the support or resistance line, so it works. So if you see, I drew a box exactly 6 o'clock at the bottom. It's a support line, and 7:20 the top candle and the top support it created. So what happens now, I drew a box there. Normally the top candle goes up to 8 o'clock, but this time it didn't go. So at 7:20 it started to drop, and it's coming down. If you see, there is a previous support. I drew a green line as well. So sometimes what happens, it comes up to there, to that green line, and it can bounce back and go crack open the resistance and then go form another top. But this time it started to go down. So now normally that green line is a previous resistance. So it's only 7:30 now, so normally it bounced back from there, and then it crack opens the resistance top line. Top line is called resistance. It opens and it forms another high. So I can readjust the box for 8 o'clock, and then I will wait to see in which direction it's going to go. So also I drew a trend line to see whether the trend is down or trend is up. So it looks like a trend is down, so I probably looking to see the after 8 o'clock to come down. And then I drew a previous box as well. It's yesterday's ranging, yesterday's box. So if you see, sometimes it comes down and then it touches the previous support, the bottom box, top, because multiple times it touched there, the top resistance. It may come up there and then go. So if we know exactly where it can bounce back, and normally it happens, the previous support and resistance lines, if you draw and wait and then buy from there or sell from there, you can really make money. For beginners, what I'm trying to say is take some 20 pips and 5 to 8 pips stop loss and 20 pips reward. So it's more like a 3-to-1 ratio. If we wait to look for more pips, like 100 pips, like a 0.01 lot, and you wait for 100 pips, easily the stop loss will be hit, and then we would have been kicked out so quickly. So soon after we get 20 pips, just walk away with little money, and then we can build up slowly. Or from the beginning, deposit more money, at least £1,000, to make a decent lot, like start with the 0.03 lot rather than 0.01. So we can same risk reward ratio 1:3, and then 3:1, and then we can make some decent money, and then we can build up. So now I'm just watching for this box to crack open on the top, or crack open on the bottom, the support line. So normally, most of the times in London session, it follows that 6 to 8 breakdown pattern. So this most of the time this works. Not every strategy is 100% working, but it works. So if it cracks open, and then it will come up to 180, 121, the bottom line, or you can see even it will go up to there, 180.229. That's how it works, London breakdown strategy. So guys, it's not a financial advice, but it's solely for education purpose for the newcomers. It's all we are learning, and it's a learning curve. So end of the day, trading is a quick money, investing is a long term. So if you are an investor, you will wait and wait, but every wait we have to pay overnight charges for the brokers. So if you want to follow 4 hours, 1 hour time frame, you need to wait, but we need to pay for the broker overnight charges. It's a little interest for the broker to keep our trade open. But if it accumulates, we need to it builds up a little bit, extra money goes off from our account. So if you are a day trader, this is a perfect strategy. Just draw a box between 6 a.m. and 8 a.m. and wait for it to crack open that box, rather than you trade inside the box. If the box is really big, and then we can use that support and resistance line and then make 20 pips, or just wait for it to open, crack open, and do the strategy. So if you see this line, I drew the line, and then if you see that it's a lot of pips. It goes from 180.043 up to 180, even 184, 149. It's like a 400 pips. So 400 pips is millions and millions of money for the people who invest in trade in millions, for big bankers. So for us, we can catch 20 pips each time, draw a support and resistance line, and then risk reward ratio 3:1 or 4:1, 4:2, according to your needs and according to your calculation and risk reward, your planning. So more support and resistance works. If you see that there is a resistance box I drew, soon after the market comes there, and then it bounces back. So it's a 182.903, and it reached 183.89. It's a lot of pips to make. So if you, and then I drew a trend line. It went there, and then it dropped there, and it touched other at 183.999. So that is that says something for us, like the market is going down. So if it opens that red trend line, the market will go up. So trend line, support and resistance lines really works. So for beginners, it's a really cool strategy. You can try that multiple times in a demo account and see whether it really works for you, because it works for the people who know the strategy and who knows a little bit extra. And then you can use a 200 EMA and then 51 EMA, and then you can see a golden cross. Soon after it crosses 200 EMA and 50 EMA moving averages, then you can place a trade. And then if you see the 51 EMA for now, it's going, look at that, it's trying to cross the red candles. So it says something like the market may go down and touch the 200 EMA, the pink line, and then it can bounce back. So it's like a combination of multiple strategy, and then you can work it out, or just do with this box only. Use that box, and then 6 a.m. to 8 a.m. box, and then you wait and see what's going to happen, and then you can place a trade away from the box. So wait for the market to open either the bottom line or the top line, which is called a resistance line, or bottom line, which is called support line, and then you can place a trade, rather than you place a trade in between. If you are comfortable to place a trade in the box, if it ranges to catch up small pips, that's fine as well. So mostly the strategy is wait after 8 a.m. 6 to 8 you wait, and after 8 a.m. you wait and do the trade after it opens in top direction or the bottom direction. Thank you for watching this video. I hope you will understand something and learn something in this strategy. Please subscribe my channel to get more videos like this and support the channel as well. Thank you.